Good day, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. Today is January 15th, 2020, and it's a Wednesday. And thank you for tuning in. Now, I want to get started. I want to open up the charts right here. And the first thing I want to take a look at is this repo market business. It's not going away. It's getting worse. And I am starting to, I've been having this feeling about it for a while now that this is a meltdown in progress within the very heart of the financial system. And the Fed is trying to hold it off or stave it off, and it's not going away. It's getting worse, and it's making their balance sheet grow bigger and bigger, and their holdings take a look on this chart. You see the blue going up. The chart starts in September, and it goes up until January 2020. The blue is how much they're holding in T-bills, how much they've bought. 169.52 billion worth so far they've bought of T-bills. This is probably what's holding the meltdown that's ongoing. It's an ongoing meltdown. If this was like a nuclear reactor, it's melting down right now within the financial system. And, it really reminds me of 2008, when they say, oh, we got all this contained. It's contained and all this kind of stuff, This is not contained, this problem. This problem's growing larger. At a certain point, if it keeps on going and getting larger, at a certain point, it's going to start to ring bells it's going to start to ring alarm bells within the financial system, because this is at the core of the financial system. This is showing a huge problem with their Ponzi scheme. We all know sooner or later their Ponzi scheme is going to actually go down in flames, because that's the way all Ponzi schemes are. They continue to grow and grow and grow until they can't grow anymore. One of the big problems with expanding the monetary supply through debt and continuing to go with this, as long as you can keep the main street economy, the main economy, the economy of the people, as long as you can keep them satisfied and keep it working, keep the main economy working, then you can continue to play this game with the money supply and have this meltdown within the financial system and keep adding liquidity into it, and you'll see consumer price inflation keep ticking up higher and higher, but the people will accept it. It's just basically adding zeros to your money. Your money becomes worth less and less and less and less. And as long as the Main Street economy stays strong, the people will continue to use that fiat currency. They'll just accept it and keep paying more and more and more for items that they buy and purchase. And they'll watch their savings disintegrate, but they'll stay with it. They'll stay with it until it costs $1,000 for an apple. They'll stay with it. The people will, as long as the economy has some sort of a little bit of vibrance there. And that's what we've been seeing. We've been seeing the economy, the general economy, the Main Street economy, still, it's not to the point where the people are going to be upset or anything like that. But when the Main Street economy goes down in flames, then the whole thing melts down, And right now, the Wall Street economy is the tail, and the Main Street economy is the dog, and the tail is wagging the dog. That's what's going on right now with all of this. So what we're seeing here in this liquidity crisis with the Fed, it's not just solely a liquidity crisis. It's also the banks, their good quality capital. It's a crisis in both liquidity and capital, and high quality capital. And that things like treasury bonds and stuff like that, they're manipulating things behind the scenes, and they keep rolling these loans over. So what we're seeing here is the red. The red is the amount of Fed liquidity injections into the repo market. And you can see it's rising daily, And the blue is the amount of treasuries that they're buying, T-bills that they're holding, and it's rising daily. So this problem is far from being over. This problem is increasing in intensity. What are they going to do? You know? This could be our black swan. Right here. Right under our noses. Anyway, let's move on. Let's take a look at the silver price today. It's up 14 cents on the day, but it's descending back down again. It's following this pattern, you know, and it's right in a certain trading range. Around $17.80 is the center of that trading range. Let's take a look at gold. Gold is following a trading range too, right in around 1550 is the center of the gold's trading range right now. And let's take a look at cryptocurrency. Cryptocurrency has caught a bid, a nice bid. It's rallied back a little bit. Right now, it's at 241.7 billion. Let me refresh the page. $242.3 billion. You know, there could be a little bit of strength in this rally. It could continue. And the reason why I say that is we see the altcoins catching a bid. Some of them have caught a rather large bid. Bitcoin SV is one of the ones that's caught a large bid. And Bitcoin Cash has caught a nice bid too. We've seen a few of them catch a nice bid and move upwards quite a little bit in price. What other ones caught a good bid? Anyway, Litecoin wasn't one of the ones that caught a real good bid. Litecoin is still, though, it's been moving up. It's at $58.35. Bitcoin itself is at $8,842. You know, there was a 6 on that number just a few days ago. 6,000 whatever. 6,800 or whatever. You know? Now it's 8,800. You know, so we're seeing quite a little price gain there in the cryptocurrencies. Let's take a look at the Dow today. It's up 54 points. Every single day I keep saying it's up, it's up, it's up, 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 up. There we go. There's a 1 month chart. Just steady trudge upwards. It's melting up. It's melting down. It's basically the market. It's not melting down. It's melting up. It's gone parabolic. Well, I'm going to tell you, nothing goes parabolic forever. Nothing can go straight up forever, you know. Take a look at 6 months. You can see this parabolic gain in the market. Let's take a look at a 1 year. You can just see it's steady, trudging up, 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 up. You know, it's nothing goes up in a straight line like that. Nothing. I mean, what goes up, there's an old saying, what goes up must come down. You ever heard that saying? Let's take a look now at crude oil. See what crude oil's doing today. Crude oil is moving down 15 cents on the day, which is not very much, but it's 58.08 today. Ever since they got that whole thing settled, not really settled, but ever since I used the wrong word, settled, it's not settled at all. Sorry, I used the wrong word. The Iran thing is not settled. Okay, but it's cooled off for a little while. How long? I don't know. It's cooled off just for a little while. Let's take a look at U.S. Treasuries today. What did they do to my Treasury charts? U.S. Treasuries, they changed this chart all around. I don't like the new format. They've made the letters a lot smaller, harder for me to see. You know, I have to get right in here close so you guys can see it. Bring the chart in real close. Okay. What we're looking at is falling Treasury yields on the long end of the yield curve. We're looking at 2.24 it's gone down 3.2 basis points on the 30-year, 2.8 basis points on the 10-year, and the 10-year stands at 1.79. The U.S. 7-year is 1.71, and it's down 2.4 basis points. And so the long end of the yield curve, starting with the 2-year, all of the yields have fell today so far. roughly 2 to 3 basis points. So we got falling yields on the long end of the yield curve. Moving down to zero, guys. Okay, well, you know what? I can see a time coming in the future where U.S. Treasuries continue to fall in price. And these other treasuries that have been really down really low in other countries and stuff, and in emerging markets, their yields rise. You know, I can see that time coming. And then that's going to leave the Fed with no other alternative except to buy all the treasuries. Anyway, let's take a look now at the U.S. dollar index for today, and I'll open the chart back up a little bit again. We're looking at 97.19. We got a falling dollar today. 97.19. It's down 0.18. The dollar's been riding high and riding strong, you know, but it's fallen off a little bit today. Listen, thank you guys for listening to this market report. Like and subscribe. Give me a thumbs up. We'll catch you guys in the very next show. Bye-bye.